What's up, BiggerPockets? It's Mat Piche, the Fruitful Investor, and we just finished up a single family rental property. I want to bring you guys on the inside to show you my system, how we renovated it, and stay tuned because at the end of the video, I'm going to break down all of the numbers and the financials on this property to show you guys exactly how much we're going to make. Let's go check it out. So as you can see by our system, we fully flip everything, totally renovated because we want high quality tenants who are gonna pay top rent. So we redid pretty much everything, floors, paint, trim. We did this accent wall, which is something we always do on all of our properties. In fact, if you watch my videos on YouTube, you'll find that every single property we have looks the exact same as this. We just take this system and do it over and over again. It makes it really simple for us because my contractors know exactly what to do. And also it attracts a high quality tenant because we know our clientele so well in my local area and they really, really like this style. So we're just gonna keep rolling with it. In the kitchen, we gutted the old kitchen that was falling apart, as you can see in the clips. So we did all this brand new. We always use the shaker style white kitchen. That's the modern touch that's in with the granite looking countertop. We never use granite or a hard surface countertop in a rental property just because we don't want tenants to ruin it with stains because they can seep into that quartz or granite. So we did a laminate countertop with this big square sink. Another thing we're starting to do now is not use, the cheap double sinks from Home Depot where they're rounded. We're getting the square modern one, looks pretty cool. Black restaurant tap as always, so we always want that black accent, and then the stainless steel black appliances. So it turned out pretty good. Let's go see the basement. So in the basement here, we totally took off all the paneling on the walls, and then I think on the ceiling, there was some sort of ceiling tile. I can't remember, we'll show you some clips here. But we took it all down, drywalled everything, put some pot lights in, made it look really more modern and just a better space for the tenants to hang out in and have their kids play in. Let's go upstairs and check out what we did there. So upstairs here, we just carried the theme all the way through. We didn't go as wild in the bathroom as we normally do. Normally we're tiling all of the walls and everything, but in this case, we kept it because it was pretty clean. So we just kept the tub, cleaned up the caulking. What we did do was replace the floors here with the white octagon tiles like we always do. We did a new vanity, new mirror, new lights, just painted everything nice and easy in and out. In the bedrooms here, we carried the theme all the way through. Again, new floors, new trim, new doors. So we always use the 6-panel doors, just a more modern touch with the black handles. Again, it's all about those little details. All right guys, let's get into the numbers now. Now that the project is done, I can show you exactly where we stand. So we bought this property for $337,500, which is an outrageous price in my local area for a semi-detached property like this. That was a smoking deal. It was just one of those diamonds in the rough that just kind of sat on the market for a bit. We jumped right on it with a firm cash offer, blew the seller away. They were so happy, but we knew in the background we were getting a great deal. So it was a win-win for everybody. The down payment for 20% down is $67,500, kind of standard all across North America, right? 20% down payment on a residential investment property. The renovation we spent on this one was just under $35,000. That was including everything you saw, paint, floor, trim, kitchens, doors, everything top to bottom. Refinished the whole basement as well. Closing costs, so lawyer fees were $1,700. Again, kind of classic price for my lawyers here. That's kind of standard for what we're doing here. Land transfer tax on this was $3,648. So if you don't know what land transfer tax is, here in Canada, my local market, we basically have to hand over a check to the government every time we buy a property and the title changes. It's kind of a cash grab, but that's the way it is. We play the game, we play the long game. Doesn't really matter, right? The sleep at night fund. So every single time we buy property, if you don't know what this means, we put 1 month's rent in the property's bank account. So by the way, every property you buy better have its own bank account for every single one. It keeps it easy, nice and neat for our bookkeepers and our accountants, and also for you. So don't forget to do that for every single property. But when we buy a property, we put 1 month's rent right into that bank account to just bank for a rainy day. So in case a tenant moves out and there's a month or two layover where there's no rent, or if the tap breaks or something breaks in the house, we have the money. This is also more sophisticated if you have joint venture partners. So for me, right, all my partners are bringing all the money to the deals. I'm kind of structuring the whole deal, making it work. So I want my partners to put this in there, because if something does happen in the future, I don't have to look stupid by going to them, knocking on their door and saying, hey, we need another $2,000, $3,000 or whatever to fix this. We already have a good amount of money in there, and every single month we're putting the cash flow right into that bank account, which I'll get to in a second. Just building and building that reserve. That's how we do a savvy real estate business, right? So the total investment on this property to purchase it on day one with everything included was $110,000 and 148 bucks. Again, if you watch my videos and you watch kind of my breakdowns on the properties, the 110,000 mark for the single family seems to be a common theme. This is kind of standard for the deals we're doing in my local area. So let's get into the monthly payments, which is the most exciting and probably what you guys want to see the most. So the mortgage payment on this is $1,138.31. That's calculated on a 3% interest rate amortized over 30 years. Again, a classic structure in Canada for investment properties. Our property tax on this one is $197.58 per month. Insurance, 90 bucks per month. Our property manager is 95 bucks a month. Yes, every single property that we do is handed out to a property manager. Our job as real estate investors is to grow our business, find more money, find partners, find deals. We don't want to spend our time managing properties, changing toilets, chasing tenants for rent. You know, I started doing that myself when I started off and I had 1, 2, 3 properties, right? I kind of did that, and I suggest that for you too as well if you're a new investor, just so you can learn how crappy it is to be a property manager, and then you'll eventually pass it off and respect your property manager for the kind of crappy work that they have to do. So eventually, you definitely want to pass this off and spend most of your time growing your business, right? You are the CEO of your real estate investing business. Your job is to find more money and find more deals and grow this business. Don't be stuck doing this kind of stuff, right? So our total expenses per month is $1,520.89 per month. Our monthly rent, if you remember from the Sleep at Night fund, right, is $1,800 bucks a month, which leaves us with a cash flow of $279.11 per month. So not too bad. It's actually a pretty good single family cash flow for my area. But again, we're not really gonna get rich on this, right? This is a long-term game for the single family property. So that Sleep at Night fund I was talking about, every single month, we're putting 279 bucks in that reserve fund, every single month, just building that up. And the way we structure our deals and my partnerships is, we're not drawing the cash flow every month, because like, what are we gonna do with 150 bucks or so each of us every month? We're not gonna have a smashing party or anything like that. You can't retire on that. So we're just banking all of that money, growing that cash flow, and then when we sell it, typically in 3 to 5 years, for my partnerships, then we'll split all the cash flow 50-50, as well as the mortgage pay down and the appreciation, all the benefits of real estate investing. So guys, that's the breakdown. This probably turned out really well. Another great addition to our portfolio. I hope you learned something. I hope you liked this video. If you did, smash that like button right below. And also don't forget to subscribe to the BiggerPockets YouTube channel right below here. If you want to find out more about me, just type in the Fruitful Investor on YouTube and you will find me. I'll see you in the next video.